Welcome to Indianomics. I have today a very special guest, former SEBI chairman, Mr. M Damodaran. Now that's a very inadequate description of Mr. Damodaran. For those of you who have not been around very long, for my young viewers, let me tell you that from probably the year 1995 to 2015, Mr. Damodaran was the go-to man for the government to solve many a crisis. What immediately comes to the mind is the three banks, Indian Bank and UCO Bank and United Bank. He was the officer on special duty at RBI to resolve that. And much later, and more importantly, when the UTI was in trouble, it was Mr. Damodaran who was telephoned and asked to take up to relieve that first mutual fund from the trust deficit, and thereafter, of course, he headed IDBI as well before bebeing in the SEBI. So, Mr. Damodaran, you're always the most important person whose voice should be heard.
Pleasure having you.
Sir, I want to start. I must explain as well that I have Mr. Damodaran here because he now heads a corporate governance institute called Excellence Enablers Private Limited, and the company has just concluded a 2-day conference on corporate governance called Gatekeepers of Governance. So literally he is a guru of corporate governance, and it is in that avatar that I want to speak to you today, sir. Okay, now for starters, I mean, SEBI is in a way a gatekeeper of corporate governance in its many roles. Compared to what it was when you were there and now, do you think that rules have been learned and issues of corporate governance are at least better served by companies and boards? Any improvement in behavior?
I left SEBI in February 2008. We are now talking in November 2023. Clearly some things have changed. Most important changes have been in the regulated universe. More players, more jurisdictions that are investing in India, more products, more persons offering products. The complexity, to put it briefly, has increased. The width, the depth, the complexity, everything has increased. SEBI has tried to keep pace. Sometimes you get the impression that it's over-prescriptive. Sometimes you get the impression that they're not able to act quickly enough. But it's not for want of effort. I would be the last person to say that. Every regulatory organization has to reinvent itself, and I believe that SEBI has done that better than many organizations worldwide.
Oh yes, indeed. I would assume most people in India will agree with you on that. Okay, let me come to SEBI in a bit. First, about the other things that SEBI has already incorporated. For instance, there seem to be more professionals-led organizations now because private equity has bought out several promoters. In fact, the SEBI a few years ago even tried to remove the word promoter because in so many cases it is, private equity-led. Do you think professionals-led organizations and boards are better than promoter-led?
It's interesting you ask this because we've just completed the 1.5-day Corporate Governance Summit. This is our 8th annual summit. We missed 2 years because of COVID. Otherwise, it would have been the 10th. And this question came up. It was the subject that was addressed by one of the panels on day one of the conference. Because I've always believed, and I'm the one who gave the topics for the various panel discussions, I've always believed that this assumption that a non-promoter, whom we call a professional, runs a better shop is misplaced.
So,
that is, we've seen enough instances of misconduct of organizations led by professionals. On the other hand, there are some excellent people who come in the category of promoters who run the companies for the right value systems, the right interests of the stakeholders, etc. So I would not generalize, saying that if you put a professional on top, the question in my mind is, he's a professional by qualification, by definition. Is he conducting himself professionally or not professionally? That's the question. I was asked this when I joined UTI, and somebody said that you are a non-professional, you're not from the finance sector. I said, so long as I'm not unprofessional, you shouldn't have a problem. So I don't think there is enough evidence to show that because a non-promoter heading an organization, it is run better, because the real problem is you stay too long, you tend to shape the organization in the way you want to shape it. Then at some stage the person becomes at least as important as the organization, sometimes more. Therefore, I wouldn't subscribe to that.
Okay, so we cannot assume that just because more private equity is in charge. But are private equity companies, in your experience, good gatekeepers of governance?
That was the expectation. When they came in initially, the expectation was that they got into companies which did not bother about governance and then wanted to list in due course, and therefore private equity brought in the governance practices, brought the principles that you need to have, avoidance of conflict, reduction of asymmetry of information, all of that they brought. And they had board seats. In some companies, there has been tension, for want of a better word, between the founder, promoter, owner, call it what you will, entrepreneur, and the private equity investors. They've added value. Have they added as much as they were expected to? Because it's believed that they are people that come in with a lot of experience. One of the things that seems to have gone wrong, and we heard this yesterday in one of the panel discussions, was that having invested and getting 2 board seats or so, they send very young, inexperienced people who've never seen a boardroom, because they're working in that company, to sit on the boards. Now the promoter can take them on a very good merry-go-round, or these people, not understanding the role, can step on the toes of the management.
Yes.
Both could happen. So can they do better? Certainly they can do. But then they bring in the money. The country needs money, the companies need money. They do bring in good practices. Is it as much as is expected? Is it on the same wide scale? I'm not so sure.
Now, in your time, you took on the participatory notes guys. I mean, you were willing to make rules, even though there was a fear that the FIIs in those days will run away. Now, SEBI has tried to do something similar. There was this worry that using the FPI route, some groups, like the Adani Group, are trying to circumvent the minimum public shareholding norms. Of course, the Adani Group has strongly come out against it. But the SEBI rule is that if there is any FPI which owns more than 50%, only one group, you have to disclose every last granular detail. You think SEBI is on the right track, or is it taking on, and India will become a place of too difficult to do business, not ease of doing business?
No, the general principle is you shouldn't make it so difficult that nobody will come in. If you raise the bar so high that people walk under it rather than jump over it, then you won't have a disciplined market. Let me rewind to 2008, or maybe 2006, I think.
Yes.
Yeah. 2003, SEBI had issued guidelines saying that in a period of 5 years, you need to wind down your positions on the ODIs, right? Nothing happened for 2.5 years. The numbers were going up. The indices were going up, and it was clear that a lot of it was money coming from the outside. It could be short term. There will be people in the market for the short term. That's a function of the market. But people that you don't know whose money it is, and they're not investing directly in your market. They are investing through offshore derivative instruments that somebody is issuing to them outside of India. Regulation becomes very difficult. And at that time, all that we did, it was not very favorably viewed by all those people, was we said, look, you were given 5 years. It's 2006. Clearly no progress has been made. All that we are saying is no fresh issue of participatory notes. We don't want to add the number. And you let us know whose money this is. Any regulator is interested in knowing who is the investor in his or her market, right? Now, if there is some kind of wall behind which the beneficial owners sit, and then there are other people that invest on their behalf through participatory notes issued outside of India, etc., regulation can get very complicated. It can get destabilizing. That was what we did at that time. Of course, some of the fizz went out of the cola, the markets went down a little bit. We didn't mind because they'd gone to, in that context, astronomical levels. In 3 years, it went from 6,000 to 21,000. So we didn't think that that was a healthy movement upwards. I think SEBI is not just well within its rights, but also tasked with the responsibility of ensuring orderly conduct in the marketplace. How do you do that? You have to ensure that the money that comes into the market, you know who is at the end of the thing. There may be multiple layers in between, but you need to know whose money it is. Because there's also the fear that this is tainted money that could be finding its way into the market. Is it drug money? Is it money laundering? And all of that. So you got to know that. And I think this 50% is a good idea because otherwise it will be almost as if one fund is investing in one company. And even for mutual funds, for example, you have the 20
you have to diversify.
rule. So you need to diversify risk. But you shouldn't go to the extent, and I suspect that could happen, of writing out regulations, even if you call it light touch, for people who don't need your protection.
No, actually, sovereign wealth funds are excluded in
No,
this.
that's right. No, but even otherwise, the people that come in, the US tried it some years ago and then gave up very quickly because those people said, we don't need your protection, we're willing to take the risks. These are guys that had deep pockets. So when they were coming into those funds, you try to regulate them for whose benefit, we don't know. I think it's a good thing. Regulations cannot be written in stone. They need to be revisited, tweaked if necessary, overthrown if necessary, and replaced, which is, I think, the journey SEBI is on.
So let me take a quick break. I'm coming back with more questions, more contemporary questions. We are back in a jiffy.